Hello, geniuses, and welcome back to a very rowdy Genius Wednesdays. Today is Wednesday, July 8th. Chainlink is up, Doge is up, everything's going bonkers. Bank of America is paving the way. Crypto mass adoption is coming. The team has a lot to say about it. So Jeremy Bourne, can you please repeat that little nugget that you had about a 16-year-old in a TikTok video over the last 24 hours?
Yeah, so in essence, if you haven't been paying attention over the last 48 hours, some 16-year-old, sorry about that, my kids' stuff is all over the floor. A 16-year-old from TikTok basically just showed a Robinhood account and just showing how Doge was just showing an inverted, curve, and it was going up tremendously quick. And I think it was up 50% in a day. And he said, come on, guys, everybody, if you just put $25 in, let's pump this thing to $1. And if it hits that dollar, then that's $10,000. So he's like, let's pump the heck out of this thing. And then all of a sudden it just went viral. All these millennials and Gen Z just went to, Robinhood without really knowing the implications of buying on Robinhood. You do not own those coins. Let me just clear that up right now. You do not own any coins that you purchase on Robinhood. But anyway, long story short, we saw that pump tremendously. I think it's well over 100% over the last week in terms of how much it's pumped. So yeah, that's one of the main things that's transpired over this week, including that of what Josh said, which is the people that are backing the Link or the Link Army or whatever it's called. Link has gone up tremendously. I got in pretty early as well. A lot of people were talking about this as soon as they announced some sort of partnership with Google. And we've seen that go from, I think when I originally heard about it, which was like $1.83, and now it's, I think almost at $6 at this point. So I mean, there's right some now. Serious $6.30.
Yep.
Oh my God. All right. So this is what's going on. I'm gonna pass over to Josh and Dustin to talk about Doge and Link and hear their thoughts. Basically, there's just a lot going on.
Justin, you want to hit Doge?
Josh Lawler,
Doge?
the only thing fanboy of Link, and we've got 5 people talking at once here. So Josh Lawler, let's hear from you first, and then we need, I know Dustin, and then you can comment, and then Steve needs to jump in with this market analysis. I did mention everyone's pretty rowdy today.
Well, it's exciting. It's very exciting. So yeah, no, I'm a huge Link fanboy because of their use case. And what you've had over the last 48 hours is just a stream of announcements of integrations with enterprise well-known names. And guys, it makes sense. It's not a kid on TikTok.
Wait, Josh, I got to interrupt you. You're not giving yourself enough credit. Josh over there bought the entire coin supply at 1/10 of a penny. That's why he's actually the genius of all geniuses. I'm kidding, man. Sorry, bad joke.
Thank you for interrupting my substantive discussion with that not really too funny digression. It was great.
Sorry, man. I was trying to give you some credit. Like you have been talking about it though for many months. Like
I absolutely have been because.
Josh, you're on mute. You went on mute somehow.
Yeah, no, I did because I wanted to tell my wife that maybe not the best time to break down boxes next to me. But in any case, yeah, no, it's all, I'm a use case guy, and Link's got a fantastic use case. So, it's not a kid on TikTok. I don't think this is going to be temporary. Will it pull back? Yeah, sure, probably. But I think its upward trend is going to continue. I know very little about Doge, except there's no use case. And it's also not a security, interestingly enough, because the idea of a very publicly stated pump and dump really kind of cracks me up. But like, I can't think why it would be illegal with that token. So there you go.
Hey, Josh, can I take it a step back for those that since we're talking about, mass adoption and all that, would you take 1 minute and explain to, I guess, people that might not be familiar with Link, what you see, like their use case, like how is it different from ABC coin or DY? We know, many of us know, but explaining to the listeners how it's unique because.
Thank you for asking. And yeah, that's one of my really horrible flaws on this stuff is I assume everybody knows what I do. Okay, so Link's use case is basically verification of the truth of facts in the real world and translating that into a trigger of a value transaction on one of many blockchains they integrate. Thus far, it's been primarily a financial tool. So, they'll have what are called oracles, and the oracles are chosen, selected by, reputation and other items, and the oracles get awarded, link for doing their job. And what they are really is they're data streams. They're trusted data streams. So what Link does is it receives data from these data streams, multiple sources, compares it against each other, verifies it, and then at that point it can be translated out as being, quote, true. And for certain things, it's an easy adoption. So financial uses is where, you're looking at, what's the overnight prime rate, or what's the price of Doge on a particular exchange at a particular time, or the average price across exchanges. All that stuff is relatively easy because they're verifiable and they're relatively simple. But ultimately, there's no reason why this can't work in a more complicated sense. So one of the examples I like to use is, if you're looking at tracking global warming, there's a whole bunch of different satellites that are putting out a whole bunch of different information. And if those are kind of linked in as Oracle data streams.
LinkedIn.
Yeah,
I'm kidding.
That was accidental. Thanks.
I know.
If they're linked in as data streams, you've got a better picture and a more trustworthy picture of what is actually happening at various places in the atmosphere. And that use case is huge. And there's only one other token that I think has got an eye on this, and that's Cardano. I was just talking to those folks earlier this week, and their Shelley iteration that's due out in a couple months has some basic Oracle functionality. But Link has got such a massive lead on the market, and it doesn't threaten anyone. Cardano's a platform, so they have to fight the platform war.
And Link already has a bunch of the partnerships in place,
Yes.
which is traction, which is user adoption, which is really what drives the use case. It can be the greatest use case if it sits on the shelf. It doesn't really mean as much as when you partner with Google and now it's actually being used in the real world.
Exactly.
All right, Josh Lawler, thanks so much. We're going to go ahead and pivot over to Mr. Steve Bruhahn for our market analysis. There is a tremendous amount of things going on this week.
Oh man, Kristina, I feel like you need to give Dustin a second on Doge before we pass it over to Steve. He's chomping at the bit here. I know, but this is the news. This is what's,
almost like a Doge god, really.
Doge is the story. Doge is one of the stories this week. I know it.
It is.
I know.
Have you guys ever seen the transaction speeds of Doge? Man, it's like lightning fast, and that's about it. The only thing I'm going to say is Doge is not going to go to $1 anytime soon. Like, we all know it's kind of like a pump and dump coin. It might go to I'm just taking a wild guess here, but it may go to 60 sats or something like that. But the one thing I will say, though, it is exciting to see coins like that kind of go up in price because, everybody knows when you start seeing coins like XRP, XBG, Doge, Digibyte, coins like that, when they start going up, that usually is a precursor to like an alt season, when you start just seeing these random coins for no reason. But that just kind of, it kind of goes to show you the power of social media too, as well. I mean, this is a 16-year-old kid on TikTok saying buy $25 worth of Doge that essentially caused this spike in the price. So, I suspect that, once this market does turn back around, we're kind of going to be back in the glory days where you see people that have like a pink hyena profile on Twitter, like Macho. I don't know if y'all ever followed Macho on Twitter, but they just, they'll take any coin, they'll put some emojis on it and blast it on Twitter or something like that. And then the coin will go up like 600% in a day. So I am pretty excited to see this market kind of turn around and start seeing some more of these, social media shill posts to kind of drive the market up. And so that's all I'm going to say about that.
I want to really quickly give a little compare and contrast. I was just on Kraken checking this out.
I was going to give a quick point on Kraken, so sorry to interrupt.
Go ahead, Ben.
But as an employee, I'd like to chime in. it's interesting to your point about alt season, possibly being around the corner, because Kraken has some very interesting coins and projects that are listed, including Doge, that being regulated in the United States and being an exchange that is taken, in my opinion, pretty seriously from a regulatory standpoint, to have things like Doge, Algorand, Augur, which is something I'd really like to talk about with if we have time today.
Hey Ben, this is Steve Quant. Do you want to just tell the listeners, just give them a brief intro of who you are and what you do real quick?
My apologies. Yes. Hi team. Hi everybody. My name is Ben Leff. I do a multitude of things, but I work for Kraken Exchange in several capacities, mainly in business development. I advise, or rather I work for the Own Your Data Foundation, Brittany Kaiser's Cambridge Analytica whistleblower, her foundation, as a director of communications. And I also work for Give Nation with Elise Sam, which I'm sure many of you all know. That's a little bit about me, and I've worked on several ICOs in the past and done some advising and consulting in different countries, mainly Vietnam, which has been that's a very exciting crypto market. So it's been an interesting ride for me, but that's who I am, and sorry for not introducing myself first.
Ben is being modest, everyone. What you want to say there is, when you hear about crypto influencer, look no further than this gentleman.
No, sir. I just like to connect point A to point B, but I appreciate it. Thank you, and it's great to be here. But I just did want to jump into the point that it's interesting when exchanges like Kraken do pick up these smaller coins like Augur, like Doge, and Algorand, and there's actually a very, very heavy liquidity pool for them, and that's my piece there.
Yeah, I just want to do a quick compare and contrast on the last 24 hours of Doge and Chainlink, because I went to Kraken and Doge went up to $0.006 dollars and has since come back down to $0.004. And if you look at the depth of the order book, I think the Doge TikTok factor is probably over for the moment. JP saying 48.9% dip, great. Yeah, and then Chainlink is still at 620 and rising. And if you look at the MCAD and various other things, I think we're looking pretty good. So Substance versus TikTok. Can't see my hands. Substance, TikTok. There you go.
And I think what Mr. Lawler is trying to say is, in blockchain, there's a lot of different projects. There's a lot of different investment styles. At least I'm not an investment advisor, but if TikTok is your thing, there's people that do that. If, researching and use case, or, the tangibility, I guess I should introduce myself. I'm Steve Quant. And Ben, can you do me a favor and ask Mr. Ripley to come on one time? He knows me from school, man. I was in his fraternity back when I called him Ripley, and he called me Quan. So I don't know if Ben can still hear me, but
I can hear you. I'll make the request. I'll definitely ping him.
So here, I'll give my my 2 cents on the market. I guess I always have a soft spot for Doge, because I remember 2017, I believe it was 1,000 coins for $1. So it was just one of those coins where it was, it's been around, and its valuation, it might not be the biggest, but it's, it's hung in there through thick and thin, and it's had a top 50 market cap valuation for more than 4 years. Like, why? I don't know. I mean, like you were saying earlier, it does transfer quickly. It's very inexpensive to move it from one exchange to another. And I'm sure there are pluses and minuses about a lot of different things, but the one point that I would really add to from a market kind of macro is the volatility. You're actually having volatility in everything not called Bitcoin, and Bitcoin, or what most people call crypto, its implied volatility is actually dipping below US equity index volatility. Now, I believe there was a gentleman I was talking to yesterday who's also on the call that might want to expand on this, but that is an improbable scenario, and I would say not sustainable. So whenever Bitcoin does get all this unwinding up energy, whether it's above 10,000 or below 5,000 or above 20, I couldn't tell you, but its bands are just coiling and coiling and coiling, and you're going whichever way this next move is, it's not going to be a stop and start. And that is my, I guess, key point, that, you know, be aware that Bitcoin volatility is lower than US equity volatility. And
I
think
think
about
that's a really important point. The other thing that's a really important point, being the designated old person on this, and it's not that long ago, you know, history doesn't repeat, but it certainly rhymes. What we're seeing in what we saw in 17 and what we're seeing starting now is a lot like what happened in the late 90s and after Y2K, the screaming up, you know, end of melt up of the internet bubble. What I mean by that is, look, I was on trading desks and there were so many OTC stocks that would get through a hype cycle, and message boards. People don't realize that there were, you know, okay, there wasn't TikTok and it wasn't Telegram. So it
Yahoo
was
message boards. You remember those?
Silicon Investor, Yahoo message boards. And people who, you know, guys that no one knew who the hell they were saying, let's go get this, and boom. You know, I'll never forget, my favorite story was Swan Valley Snowmobile was a company. They changed their name to Net Taxi and claimed to be starting a virtual community. And the company went from being worth several $100,000 to, at its peak, $800 million. And it's literally exactly what happened. And, you know, this all happened within a space of 2 or 3 years. Most of that ramp to 800 million was in a space of less than 12 months. And 2 years after it peaked at 800 million, it was gonzo. So, you know, these things, people have to understand that there is always a human tendency to put money into something with no reason behind it whatsoever, chase it up. The greater fool theory says you get out. Now, I sold 25% of my net taxi position at a very nice profit, 75% thinking it was going to the moon, and 75% was at a loss when I finally got out. Now, net, because the ramp was so big, I actually made money on the deal, but it was something that happened all the time. So when I listen to Josh talk, look, at the end of the day, if you're buying a use case, cool. Anything else is momentum trading. There's nothing wrong with momentum trading. Anyone who thinks Tesla is worth what it's worth, I got a bridge that I'd love to sell you. But the fact is Tesla's a story. You're buying Elon Musk, and you're buying the fact that he has 3 ways with beautiful women and is a visionary, and that's what you're buying. And anyone who tries to short it, understand Tesla could just as easily be worth 2,000 as it worth 1,400 or 1,000, and so you get carried out. So at the end of the day, it's a trading vehicle. The SEC likes to say they protect investors, but the reality is people are going to trade. I don't care if it's Tesla, if it's Dogecoin, if it's Beanie Babies. Remember those? People bought lots of those things. The fact is that will always happen. But alongside that, what Kristina started off the meeting talking about is also true. There is a use case for these things that we call digital assets. Some have them, some don't. Digital, distributed finance, DeFi, is a big deal. Brad Garlinghouse, and I'm not sure what I think about XRP, but what Ripple Labs is trying to do is to create cheaper payment transfers, because there are billions of people who are unbanked or underbanked. Right now, it costs multiple percent to send money from one person to another using the traditional banking system. DeFi threatens to bring that down to borderline zero. This is a big deal. It's a force multiplier. Those are the sorts of things that you want to get behind, and there are lots of pieces of infrastructure for that. Personally, whenever I'm asked about Bitcoin and Bitcoin maximalist, all that stuff is nonsense. The reality is there's likely to be one store of value that's like gold. That's Bitcoin. And therefore that's going to be what the internet is valued in. That's in my opinion. But that doesn't mean there's not monetary value to a variety of projects that are solving very important pieces. Link solving the Oracle problem. Whether you believe Ether or will be supplanted by Polkadot or whatever, someone's going to solve the smart contract problem, which is a very big deal. The various and sundry pieces of DeFi are big deals. The only question is you have to value it. And that's where I'll leave to the rest of you to tell me about it. But whenever I see this stuff going on, look, it's interest. And at the end of the day, and I'll repeat it one more time, and I may say this every week until people finally start understanding that this is a big deal. Bitcoin and a lot of crypto are effectively trading like long-dated options on their own adoption. Because if, in fact, Bitcoin was adopted to be the denominator for the internet and the value of that, its price is hundreds to thousands of times higher. If it goes to zero because people don't care about it anymore, that could happen. So it's an option. We don't know what's going to happen. The same thing is true about all the warring factions of all the various projects. If you invested in every online retailer back in the 90s, you actually didn't do too bad, as long as one of them was Amazon. If you invested in all the search engines in the 90s, you got carried out in a body bag. Why? Because Google came in and ate all their lunches. And so
Lycos?
So I just want to.
Oh, I remember those. Yes.
I want to.
You talk the same language. Excite search engine, Lycos.
Okay. I hear Russ Wilcox trying to chime in. Let's give the baton.
Just to be clear, I'm in the Prime universe, and I am really on the I'm captain of the Enterprise. Not you, David.
Make it so.
But no, so I just wanted to chime in and kind of give some data insight on the side of both of what we're actually seeing kind of perturbed through Bitcoin sentiment for some of the reactions to the drop in Doge and all the fun things that we're talking about. So what I'm going to do is I'm going to share my screen. And here you can actually see within the last hour, when you start seeing people realizing that TikTok is maybe not the best way of getting financial advice. We're starting to see within the sentiment that we're getting more negative sentiments that are going to probably be associated with what is going on in that TikTok universe. So you can start seeing, even within the Bitcoin sentiment, that you're starting to pick up these tweets and these social media posts that are probably grouping both Bitcoin and some of these other altcoins that are suffering through this kind of spike and then drop through our sentiment widgets. In addition, one of the things that Steve Quant was talking about was specifically associated with the volatility index. And being able to really kind of look at Bitcoin and crypto as in our current market regime as a pushback against volatility. So here you can see already, as of right now, the VIX is kind of ramping down a little bit. We're seeing a little bit decrease in volatility. Therefore, we're seeing a little less correlation. So based on some of the data that we're seeing on the CoinGenius side, both just from what you can see forward facing and some of our more robust machine learning models, we're expecting to actually kind of see a rise in Bitcoin within the next kind of couple days, that I'm suspecting, echoing Steve Quant. But it comes down to this idea of, one, Bitcoin does have a use case. Crypto itself does have a use case. And secondly, within this current market regime, we're seeing some really, really interesting parallels with the volatility index.
Wait, and I'd like to give a shout out to Russ and Kinjal and the other data scientists at CoinGenius who put many of these numbers into these, I guess, to me, amazing visual pictures, where a lot of these numbers have been in my head for many years, decades, but working as a team, we've been able to kind of bring to life many different correlations and have the data points to back them that many may not have seen. Where in March, I think people might have thought I was a little crazy when I go, Bitcoin's an equity. It's going to be an equity when things start to fall. And lo and behold, on March 16th at 3:59 and 59 seconds New York time, want to know all the assets that made a low? Gold, silver, corn, wheat, Bitcoin, Litecoin, Ethereum, S&P, Amazon, Tesla. Should I go on? Okay, no.
Everything.
Yes, because it was just that you need to eat. I'm going to take a loss or I can't eat. Well, at that point, I don't really care and I guess the data scientists here are nothing short of amazing.
Well, thanks, Steve. But we're also building out some interesting models that I think will be indicative of at least this current market regime. Hopefully we'll do some more back testing and whatnot, but we're really starting to see this strong anti-correlation between the VIX, the volatility index, and Bitcoin and the other assets, reinforcing this kind of equities-based approach. So that's kind of what we're seeing in the larger data science space.
Thanks, Russ. Can we talk a little bit, hold on just a second, Steve. So I want to talk a little bit around what CoinGenius is doing. You mentioned the market regimes, and market regimes are a very big deal for us when we see things start to change behavior. So let me just break it down for the audience really quick. Bitcoin is, the majority of the market, but it was up around 70%. Now it's cutting down around 63%. We like to see that. The rest of it is you have to understand that Bitcoin forks, BCH, BVS, or SB or whatever, all the acronyms, all those forks, that makes up over 90% of the market. And then all of the alts are a very small piece of that. That's the momentum and the changes that we're seeing there. So there's like major factors that we look at to identify what a market regime is, and then we pay attention to everything else that's going on in the world. Keep in mind, they just printed $7 trillion, which is, if I check with the data science team, a lot bigger than the entire market of the entire crypto universe. So there's going to be implications to that, and we could see some drastic changes happen in the next 12 to 18 months. And we know that countries are exploring a digital dollar. I posted the news that Bank of America is paving the way for adoption here. We know that a lot of these things need to be addressed, and Russ and the data science team at CoinGenius are basically putting it all on paper so that you can see it happen in real time.
So I just want to dive in just one more quick thing to show off, that I'm not just waving my hand. So this is actually some bleeding edge technology that we're doing here at CoinGenius Labs, where we're taking standard kind of volatility indices such as the RSI and doing kind of these standard kind of quantitative Wall Street methodologies and comparing them to Bitcoin. So what we're doing here you can see in the blue a normalized price of closing Bitcoin over the last quarter or so. And in green, this is what you're seeing. This is correlated to the VIX. This is actually the gradient or the derivative or the rate of change of the volatility's index, the VIX's volatility index. And what you're seeing here is you're seeing that when you see these large jumps and large perturbations in the VIX, even with a slight delay, you're seeing a corresponding increase in Bitcoin price. So we're on to something here in the Genius Labs division where we're really, at least for this market regime, we're pretty convinced right now that the VIX's RSI indicator, if you look at the gradient of that behavior and how strong of a either rise or drop will be indicative of if you're going to have a rise or drop in the actual price of Bitcoin along with the top three other assets.
I have to comment here because I've traded derivatives for a large number of years. That is completely intuitive to a point. I want to be really clear for what I mean, and I think it's incredibly important for CoinGenius subscribers to know what it is. The reality is When the VIX spikes upwards, it's indicative of fear. There is a almost iron law that high volatility compromise, generally it's when the rate of change of volatility is positive, the market is dropping. And when the rate of change of volatility is negative, the market is rising. That doesn't mean the market's not volatile when the market's rising. What it means, I'm talking about the rate of change. So it's not the volatility itself. It's the gamma is the Greek letter that the options guys use, but it's the rate of change of volatility. Now, why does this make intuitive sense? Obvious. People believe with $7 trillion in the Bitcoin use case and why it should go higher, etc. But there's fear and scars in the Bitcoin universe from what happened on March 12th, when everybody started selling everything. And this is what Steve was talking about. When you need to eat, you literally sell anything that's liquid. If you have a gold bar and you have Bitcoin in the same dollar value, you're selling Bitcoin. Why? How the hell do you sell a gold bar? You can sell gold futures, but selling spot gold is a time-consuming, painful process. Bitcoin is far more liquid, easier to sell. As long as people still remember being liquidated in their overly leveraged long positions, there's going to be fear. And as that fear gauge lessens, people will take out more and more leverage again. Now, is that the thing? It's a thing. Whether it's good or bad is irrelevant. The fact is, there's a lot of leveraged players in Bitcoin. And so to understand why what you said to be true is almost certain to be true until this pandemic and everything around it is over, I think it's almost guaranteed to be true. And so your data scientists have done a great thing. I'm just trying to give you the reason why it's true. It makes all sorts of sense.
Yeah, and in fact, what we're doing is coming in from that kind of quant mindset where we're actually trying to model this type of regime using kind of like a Black-Scholes options volatility model. And that's aligning exactly with what we're seeing. We're building out some really, really interesting architectures to actually hopefully try to forecast and detect these regime changes. But this aligns exactly of what you're saying, David, in terms of what you would expect from the traditional trading dynamics.
Right. Yeah, it's just important. I've spent most of my career as a quant, but I find that it's a lot easier to convince people of the validity of a quantitative signal if they understand the intuition behind it. And so that's the only reason I was saying that.
No, that's great.
I don't want to do anything against the work you've done. So I think the work you've done is phenomenal.
Oh, no, thank you so much for that. I'm so glad because I come from a physics background, so it's nice to be able to have a real trader be able to kind of describe
we had
what
plenty
these signals.
Of you guys at 2 Sigma and at Citi when I ran Stat Arb. So yeah, you guys are smarter than me. I just kind of let everyone do the job.
Oh,
Dave,
I love
I'm
it.
going to post some info here. This is something that is on the path for Russ and the Coin Genius team as we start looking at our Quant Toolbox. This is a lot of information and none of it is secret sauce, but this is a bit of a list of what I'd like to tackle eventually. I think that there's a lot that you would find interesting there in speaking with our quant team and being able to unpack some of that. And I welcome that for all the folks, all the Wall Street folks that want to get involved in the crypto quant discussion. Just give me a holler and we will dissect this stuff.
Yeah, I'm always happy to talk about that stuff. It's fun. At CoinRoutes, we don't trade, right? We provide tools for people, and we're very specific on market microstructure. These sorts of conversations are really not in our remit, so it's just intellectually interesting for me.
That's great.
Kristina and Russ, I met Kristina a couple years ago, and she was one of the, I guess, few people in the data world where we actually meshed, where I guess someone like me is what one might consider an old school, more qualitative, discretionary type fund manager, where in today's world, there's far more, black box, quantitative, it's A or B. And I think that's one of the things that makes Coin Genius special is that we have people with experience in so many different fields. And my 2 factoids of the day are random. So for those that think, blockchain's a bubble and who knows, I can't tell you what the price is going to be tomorrow. Maybe it's up, maybe it's down. You can tell me the price every day, then you should be running a large institution. But for those that think it's overvalued, I'll just put a store I was at today, Walmart. they're well known. They have a market cap of about $357 billion.
Wait, who's
Now,
Walmart, Steve?
Walmart. I'm not going to go into that discussion for those that are unfamiliar with it. It's a large conglomerate started by the Walton family. But you can check Wikipedia. You'd have to check Wikipedia on that one. Or on the Paris Hilton Nicole Richie show. I think Walmart was a store that sold walls. But I love Paris and Nicole, so I'm just kidding. Shout out to them. But $355 billion for Walmart's market cap, when you look at every single project right now that is on the coin market cap list, I think that's greater than 5,000, that has a market cap of $277 billion. So I guess for all the opportunity in every one of those projects, whether people like it, use case, small, big, little, Bitcoin, shitcoin, ditcoin, whatever, I think that's there's an opportunity, in my opinion, to say the least. And one other thing that Russ and the data scientists, I always thought there was a correlation. I just couldn't come up with the exact number. Russ, back me up if I'm correct on this, but wasn't RBOB, also known as gasoline futures, one of the highest correlated to Bitcoin last year, at over 80%?
Yeah, so what you're going to start seeing come out over the next couple of weeks and months is these robust correlation matrices and widgets to traditional market assets. So yes, we noticed a really, really interesting signal within RBOB, and I think that's what's giving us the leverage for being able to help our users create more informed data-driven decisions, because we're really with Steve's market insight and kind of our data science team's quantitative skills, being able to bridge this gap of recognizing both that there is an external dynamic of social media that you might not see as strongly prevalent in traditional markets. However, as of right now, cryptocurrency markets are starting to be able to pick up the very same dynamics that you're seeing within traditional kind of quant marketplaces, where you're starting to look at derivatives trading, where you start looking at Black-Scholes methodologies, Monte Carlo methodologies, all of these different types of things. What we're doing is we're blending both of these to be able to give our users this kind of real-time information. So yes, RBOB was highly correlated, if I remember correctly. And what we'll be seeing over the next couple of weeks and months is more of these types of on-demand widgets for you guys to play with.
And notice the CTO isn't calling it gasoline. He's now referring to it as RBOB. So even old Russ is learning a little bit trading lingo, right?
Yes,
Just
yes.
like
I'm a quant at heart.
and API and Python, I found out, are not 3 letters in a snake, apparently. But I'm sorry, bad joke. I'll move on. Kristina?
One thing I'd like to mention on the topic of just investments in general and where I see trends going. I'm not a technical analysis guy. I'm not a trader. I'm more of a networker, and I speak with a lot of family offices and VC firms. And what I'm actually hearing from a significant amount of family offices is that they're now starting to advise their clients to invest anywhere from 0.25% to 5% of their portfolio into cryptocurrency baskets as a hedge, which is tremendous. I can pull some decks possibly for next week's presentation and show the amount of money from family offices that is due to be flowing into the millennial generations as this money starts to pass down, and these generations will be changing the way they invest, and cryptocurrency is certainly on the forefront of the family offices' minds. So it's going to be very interesting to see in coming years.
I love it. I think that that's kind of a bigger scale version of the folks that got their stimulus check and went and bought things on Robinhood. So I think that's a big trend. I'd love to talk a bit around mass adoption, just with the panel of folks that we have. Everyone has opinions on this, but I posted early in the meeting around kind of last week's news of PayPal and Venmo and CVS and crypto ATMs and the Visa MasterCard, onboarding, offboarding ramps. And so we now have KYC and AML. We now have the ability to use crypto and pay for it at point of sale systems. We see that massive trend, like that architecture and infrastructure has been laid out so that in the next year to 18 months, big things can happen exponentially with that. 2 years ago, that was not the case, right? They were still trying to figure out technology. So my question to the panel is, as we look at mass adoption, those of us that are here, we're here because we know it has value. But what would you say to the folks on the planet that have no idea what we're talking about like this new economy that we're really trying to help folks become fluent in, right? This is a new vocabulary set, but it is coming and people do need to be prepared for it.
Christina,
100%.
can I interrupt you for? Do you know the Bank of America settlement? I think it's worth you telling, in like a minute or less, just explaining for those that really don't know about, like it's a lot of important news that isn't getting headlines, which I think is great. It's like, it's big stories, but it's not booming the market, which is, I think, good, but sorry, go ahead.
Sure, absolutely. So I'll actually just read the beginning of the article that I posted, and I'll share this with the recording when this goes live. So basically, this is an article off of Crypto Slate, and it says Bank of America is treating Bitcoin, Ether as cash. Will let you purchase crypto with credit cards. That is a huge deal. They used to lock up your money if you were on an exchange. Man, it was a huge pain. I hated dealing with it, and a lot of people felt my pain dealing with Bank of America or Wells Fargo or anybody else in the big bank institutions that were like, what's crypto? I don't know. That's illegal. That needs to stay locked up for 7 days. Meanwhile, they're earning interest on it. I'm not going to talk about that part. All right, so the article itself says, first, they ignore you, then they fight you, then you win. The adage cannot hold truer when it comes to the cryptocurrency markets. This year alone, banks like JP Morgan, Goldman Sachs, and even the People's Bank of China, and all anti-crypto at some point, have expressed their interest in offering cryptocurrency services to clients. While their reasons may range from collecting high processing fees instead of embracing the decentralized ethos of Bitcoin, the developments mark a changing narrative in the digital asset space as far as traditional markets are concerned. Now, another American banking giant seems ready to plunge headfirst into the crypto market. And it says, purchase BTC with BOA credit cards. And you guys can go read the rest from there, but it's very exciting times.
So let me jump in here real quick, Kristina, and let me ask the panel a couple of questions. And one, I see the mass adoption coming from the big guys, the entities, the institutional money, as we want to call it, foundational money, whatever, the elites that are running all the show. Do you really, is there any kind of warning going off in anybody's head over here of thinking that maybe these guys are in it to win it and try to take over and try to take right now they control about 10% of the market, and Australia has about 4%, and I think US is around 11 or 12. You start looking at this, and us little guys, if they shake all of you guys out, and the next thing you know, who's going to take control? And then when they do, or how are they going to do it? Are they going to stop pairing the USDT and the US and the stable coins and the USD to stop pairing it into Bitcoin and stop us maybe they stop us allowing us to find a way to cash it out? I don't know. I'm just thinking, in the future, what are we going to do as Bitcoiners to hoodle or hold as much as we can and use this to our advantage, or is it going to go to our disadvantage? Because I don't think they're coming in this to not win. They just did a $190 million acquisition, and then you look at Grayscale and what they're into. This is going to be, they're coming after it. They're coming after it, and I don't know if you guys realize it or think maybe I'm wrong. Maybe I'm seeing too much into it, but that's just something I wanted to throw out there.
Yeah, I mean, to answer that and then to say something apocalyptic afterwards. For Job's question, yeah, they're in it to win it, but I parallel the digital asset space to the music space and for that matter, content space when peer-to-peer file sharing first developed. The industry first tried to shut it down and then realized pretty well, slowly actually and painfully, but that you can't put the genie back in the bottle. So
Right. Can't
then
stop
you
it.
had,
I'm not saying that.
right, no, but then you had changes in business models. And, you have, things like Spotify grow up, and Spotify is definitely in it to win it. Spotify, however, does not actually keep somebody from file sharing. So in terms of what you're saying, I can very easily picture a future where you've got the big guys who are in it to win it, and they're regulated, and they're obviously doing stuff that, is for their benefit. But I don't think you're ever going to see all of the other liquidity possibilities go away in terms of Bitcoin. It's just, it's too easy to move. You're always going to have DEXs. You're always going to have offshore.
If they do come in and they do, issue regulations and compliance orders, I'm not saying it's going to stop us. I'm just saying maybe it'll put a lot more paperwork involved. Maybe there's, the IRS is that they're going to want to tax us somehow, some way, and maybe this is a way for the banks to get involved, for them to get into,
No, that you're right.
That stuff that's coming, because regulation's coming. There is no doubt. We got to get ready for it and be prepared. And I think
right now the IRS would like to tax Fortnite in-game currency, so they're horrible. But you're right in the sense that the government getting its money is actually a great path, and anybody who I think really wants to succeed in the space needs to plan to slavishly observe the spirit of the laws. The letter may break here and there, but the spirit's key. The apocalyptic thought that I had on hearing Bank of America allowing you to buy Bitcoin with credit card is, I'm wondering if they're going to factor that into your credit report if you buy a lot of Bitcoin at a high price and it drops.
I don't know. The letter states, the letter that they wrote, that the copy there, Josh, says at the bottom that it's treated just as if you get a cash advance.
Yeah.
So
that's
a really good
nice
question.
view.
What happens when Bitcoin drops and you bought it at, you transitioned there, you did it at 10,000 and it dropped to 8 or something, where are they going to account for that?
Gentlemen, we should note that it's not only Bitcoin. There is a second contract that is accepted as payment for gold and silver and many fine metals couriers. And also, Kristina, would you say that other contracted Bank of America? Oh, Ethereum. The good as gold contract, that one too. Giving a shout out to Ethereum, it's
go ETH.
So it's hysterical because the SEC kind of did a little backpedaling on its determination of Ethereum not being a security. They determined it, and then a year later they went, well, maybe. So if Bank of America offers credit card to buy Ethereum, that probably locks up that issue. I don't see the SEC running against it. The lobbying group is too big, because it obviously would be illegal if you were buying your Bitcoin, your Ethereum as a security through B of A.
I mean, I want to comment a bit about what JP said. I mean, look, I agree with everything Josh said, just full stop. So that's easy. The fact of the matter is, it depends. There is no monolithic they. I know people like to think there's a monolithic they, but that's not really the case. There are various and sundry interests, all of whom attempt to capture their regulators and lobby/influence the government. And it will depend on use case. For example, there is no doubt in my mind that the people who run ADRs and GDRs, which are depository receipt programs that make it very hard to buy equities across borders, are going to spend a lot of firepower in a rearguard action to delay 24-hour digitalization of global equities. It's going to happen. There's no doubt it will happen. It will happen at some point, but it's going to take a lot longer because there are billions of dollars made by the large banks that run these programs, and they're going to fight it. They can't really stop that. So that's the first thing. Second thing, you talk about the price of Bitcoin, and can you go in there and manipulate it to knock people out so you could acquire more? I mean, I think Bitcoin whales in the existing world do that all the freaking time. I think the institutions that you're talking about can't do it, because the last time someone tried to corner a market was probably the Hunt brothers with silver back in the 80s. They went to prison. Bitcoin is a commodity. The CFTC doesn't do very much about things, but if you try to corner the market and it goes into the futures markets, which are fully regulated, you will go to prison. So it is very unlikely that the traditional guys will do anything quite so obvious in terms of that manipulation, because it is obvious and it's easy to be caught. That said, there are already people trying to do that, and sometimes they succeed and sometimes they don't. I think there's been a miserable failure to do it recently. It looked very clear to me that there was an attempt to push it down from the 10 to the Bart Simpson. We've got a couple of these Bart Simpsons, chart patterns. But the reality is, it looks like it's very hard in this environment to push it down, and they failed a couple times at 9,000 to break it down. And you see all these apocalyptic predictions. The reality is, I think the price will ultimately be efficient in the long run. In the short run, it's going to be horribly inefficient, like it always is. But being afraid of the people coming in, there will undeniably be rocks, sticks in the spokes, whatever you want to call it, against various projects that hit people where they hurt. The governments, on the other hand, it's a different story. The US government is seemingly oblivious at times to how much benefit they get from the value of the dollar being reserve currency, but that's a totally different story. Outside of the US, the Europeans kind of get the joke, but once you get beyond the US and Europe, you got a lot of countries where you got a lot of people where they want a stable store of value. And that's a use case that is not going to go down. And so it really depends. You could talk for hours on this particular topic, and JP, you and I probably could literally talk for hours about it. But my point that I would make is, yes, there is absolutely going to be rearguard actions fought, in particular against some of the most obvious use cases that we all see because of the billions of dollars that intermediaries make. And so follow the money. Wherever there isn't that place where it's just an inefficiency and no one's really profiting from it, that's going to take off quicker. And so you can look at it that way.
Thanks,
Awesome.
Dave. JP, I know that we want to chat. I just want to give a quick 4-minute warning. We have a hard stop at noon today. So let's get some last thoughts from everyone. And JP, I know you were going to kind of respond there. So we'll have you go first, and then we will be wrapping up for this week.
Last minute thoughts are HOODL as much as you can. I'm not an advisor or a licensed financial advisor in any way, but I will sell myself. I'm going to HOODL as much as I can and watch this amazing market that we're having. We're looking for that second wave of altcoins. Some people think it's already happened. I'm hoping it's going to happen, or I know it's going to happen. But let's break that resistance line at 9,300 and let's see it break up, and maybe we're going to go up. We've got a 62% more than a year holding, 42% or 2 years holding right now. So on the wave, so let's watch the volume, let's watch our liquidity, and let's see what's going on. Look at the volume on the exchanges. There's a lot less volume going out, and I really see adoption coming. I know that the more we get it out there, the more we explain to people, the better. Just know this: digital currency already exists. Digital currency, you've been doing it. They've been printing it up money. They don't print it; they digitally print it. So just keep that in mind.
Yep.
Your world is changing. Change with it.
Thank you so much.
Thank you.
All right, guys, we just have a few quick minutes, and then I need the bridge here. So 30 seconds from everyone. Josh Lawler.
People don't behave rationally.
Fair enough. Dave Weisberger.
I love that. There's a lot more liquidity in Bitcoin than there are in most of these altcoins. So when people get frenzied about the altcoins, they tend to move farther, but frenzies don't last forever. Investing does.
Yep, very good. Ben Leff.
For those of you that are hodling, like myself and Ja, please consider companies that are put your money to work for you, allow you to stake and earn some interest in times of these. Not to mention the debit cards that will pay crypto and cash back rewards are coming to prominence. So put your money to work and get that interest while you can. There are some great interest-bearing programs now.
Beautiful. Thanks, Ben. Mr. Steve Kwan.
Well, since I've actually never had the pleasure of talking with Ben, I'd like to give a shout out to one of the best and most prestigious exchanges located in the US, who's one of the C-level employees is Mr. Ripley, a great man. Oh, that organization is called Kraken. If you're not familiar with them, check it out. And for those that wonder, well, is Bitcoin a commodity or is Ethereum a commodity? I would simply say this: go to cmegroup.com and you can see the Bitcoin reference rate and the Ether dollar reference rate. Then one can ask themselves, who is the government advisory board for the CMA? Is it the SEC or the CFTC? And
I'm just
that
going
would
to
be
say
my
yes. They're both commodities. Done.
Yes, I agree.
All right, we're gonna do
You're-
some more. We're gonna do some more deep dives on those kind of topics. Dustin mentioned, I'm so sorry you didn't get much time today. Where you and I are gonna do a one-on-one hash it out, and it sounds like we need to do a couple of podcasts and a couple roundtables to let you guys dig a little deeper here. So I think I'll be setting something like that up as one of the Genius Network one-off events. If anyone in the audience is interested in attending things like that and getting in here in live seats and being able to chime in on the conversation, give me a holler. So that's it. That's top of the hour for everybody. Guys, thank you so much for another Genius Wednesday. We will
Thank
see
you, Kristina Bruhahn. And don't forget CoinGenius.ai.
Thanks, guys.
Bye.
That's it.
Thanks.
Bye.
Water
Good to see
Analytics
you
at
all.
CoinGenius.pro. So good talking with everybody. See you guys next week.
See you at the top.